Kenyan markets have been bearish across key value chains amidst an optimistic trading activity in the previous week. But to bring more perspective on factors driving this downward trend, we are now joined by Mugendi, investment manager at Genghis Capital Asset Management. Caleb, thank you so much for joining us this afternoon.
Thank you for having me.
Okay, great. Sure. Let's get straight into it. We have seen quite a lot of, bearish happenings or market sentiments prevailing in the equities market. Maybe from where you see it, what are some of the factors attributed to this shift in performance?
Well, you see, for last week, for last week we got a bit of a stabilization in the market, yes, following the rise that we saw in the previous week. Mm-hmm. Investors are now more keenly aware, more keenly focused on earnings, as we have earnings season coming to a close. We do have most of the banking sector stocks and companies have already released their full year 2023 financial results, and so far most of the results have been promising. We did have some major names last week releasing the results. We had KCB Bank, the KCB Group, that actually registered a decline in earnings per share growth. However, it did also announce that it has gotten into an agreement with Access Bank Kenya to buy its subsidiary National Bank, and subsequently they also did not recommend a dividend. So investors who had already started to position themselves in such names took a bit of a breather towards the end of last week, and foreign investors also started selling on the recent rally in the market, and that's why we had a bit of a stall really in the momentum. However, looking at trading today, how trading has started this week, we still think that there's a lot of value in the market, and we still see a lot of interest in the equities market, and we saw a lot of the names rallying quite hard today, and we do expect that to be mirrored for the remaining of the week and the remaining of earnings season.
And Caleb, looking at the market turnover, we see a decline by 7.3% compared to last week. How is this price movement across the boards affecting the market turnover, and maybe what other factors are leading to this?
Well, for the turnover, we did have a jump again in the previous week. It's still quite elevated, despite it declining 7% in last week. If you look at the turnover versus the average, we are trading a bit more than we have year to date. Again, foreign investors were net sellers, as opposed to net buyers that they were in the previous week when the rally started, and that could have affected some of the sentiment and also some of the trading coming into the close of last week. However, again, looking at the performance, we did have a lot of banking sector stocks release their results. Presently, we had the Cooperative Bank, Absa Bank, KCB Group, and also INM Holdings today morning, and we do see that with the exception of KCB Group that didn't declare a dividend, the rest did declare dividends that is quite attractive given where the stock is trading. The stocks are trading because the prices were quite depressed in the market. So if you look at, for example, INM Group today, they announced or declared 2 shillings and 55 cents dividends, with the stock trading at around 20 levels, around 2022. That equates to a dividend yield of more than around 11%, 12%. So these are still attractive if you look at it from a long-term average, where the dividend yield has averaged around 5 to 6%. North of 10% dividend yields are attractive to investors, and that has led to more investors positioning themselves into the equities market, looking for pockets of value. The market generally has been undervalued, with the price to earnings ratio currently around 6 times. If you look at that compared to historical average of 11 to 12 times, you can see that there is value remaining in the market. And with earnings growth exceeding GDP growth, there's still some positives that we can take from this earnings season.
And we see that foreign trading activity has also declined. So what can you say is triggering the investment space, saying that previous week was investor friendly? And also maybe what are some of investment strategies that might be appropriate for a bearish market?
Well, for the foreigners, as I said, there could be a bit of profit taking, given the previous rally. That's why they might have wanted to lock in some of the gains had they bought when the market was quite bearish and was on a downtrend for the better part of the starting of the year and also last year. So there might have been a bit of profit taking in last week's rally from last week's rallies that led to a pause in the upward momentum. For such environments, we do recommend having an income strategy where you could capture a lot of the dividends that is being declared by the companies that are releasing with book closures between April and May. So we do expect the market to remain buoyant till that time as investors continue to position themselves towards achieving or gaining that dividend payout. Also, again, with the market quite undervalued, looking at value stocks is also a key play that you could have right now, with the dollar cost averaging into some of the more stable and fundamentally sound companies during this period, with the expectation that with the banking sector leading the gains, the rest of the market will also respond in kind, and you could get some gems that are quite undervalued that will also benefit from the uptick in prices across the board.
Yes, indeed, great insights there. So thank you so much, Caleb. All factors considered, quite a lot expected for the coming week. So that has been Caleb Mugendi talking to us on Equities performance